Welcome, everybody, to the Modern CFO Show, where we sit down with some of the best and brightest minds in finance to share their experiences and their lessons learned. And today, with me, is a great pleasure. We've got Dharam Singla, the CFO from ICICI Bank. Dharam, absolute pleasure. It'd be great if you can kindly just introduce yourself and tell us a little bit more about your CFO experience and what it is that you do currently, if you wouldn't mind.
Thank you so much, Jack, for organizing this, and good afternoon to you as well. So, my name is Dharam Singla. I'm the CFO, Company Secretary, and Head of Treasury at ICICI Bank UK PLC. I'm based in London. In terms of my profile, for last more than 20 years, I've spent working with in India, Singapore, and UK at the intersection of finance, treasury, and governance to drive balance sheet transformations and create a value addition for the organization. Uh, from my perspective, I'm just trying to see how the CFO role could move away from usual stewardship towards more towards the role where it actually shape the strategy, add value to the organization in terms of improving return on equities, optimizing capitals, and also using the regulatory compliance as a competitive advantage.
Perfect. Yeah, and these are all like some amazing things that I really want to tap into later on into the call, where you can really share your experience on those kind of subjects. I did just want to quickly kick it off. In our previous conversations and looking at your history, you've managed to reduce the time of your month end closed from 15 to around 5 days. I wanted to ask you what the importance is of this, and how do you think that other businesses and other CFOs can also do this?
Yeah, no, it's excellent question. So I think there are two parts to this question. One is why it is important, why it was important. Secondly, it is how it was done. So let me
Right.
address the why part. Uh, as a CFO, I'm a firm believer that role of finance has moved away significantly from month-end, quarter-end closings or preparing regulatory reports. The kind of data or the insights finance team hold in any organization is practically unparalleled, and it's very much true in a banking context.
Mhm.
Now, the real role of finance is to add value to the organization through providing a very good insights and analysis out of the data which it holds, right? Or the information it holds.
Mm.
Now, in order to do that, you actually need a quality time analyzing the data, understanding the trend. Then only you can make a meaningful contribution to the organization. Now the question comes, how do you find the time? Because finance team is always busy, right? uh,
Mhm.
in any organization you would see they are the most busiest person in the organization. So how do you find the time? So how you find the time is by cutting down the processing part of the job. So that's why it was really important to cut down the time taken to do the month end closing, so that the same time can be devoted to a meaningful analysis where the finance team actually does a role of business partners. They show the trends, they discuss with the business what's happening, and that is what is actually really required instead of just closing the month end. So that was the rationale of why it was required. Now in terms of how it is done, so first of all, I think it's really important to take a buy-in from the team. So any task which we do, unless until team is kind of looped in or they are given in buy-in, it's very difficult to implement, right?
Mm.
Now, how do you take buy-in for this type of transformation? Uh, so again, the way I would like to do it is to show a bigger picture to the team as to how their role is important in the overall organization context, what value addition they can do in the organization through their role, and what would they gain out of it. Let's say if they become effective business partner, what is in it for them? In it for them is they become better professionals, they understand market better, and also they get more visibility in the organization, right?
Right.
So once that's done, then it boils down to the actual activity. That's where I'm addressing exactly how it was done. So the way it is done is any month end process is generally a lot of sub processes joined together to make a period close. So what we did, we listed down each and every sub process. For each sub process, evaluation was done whether it can be automated. A. B. Can it be done prior to the month end closing itself? So it means prior work. 3. Whether it can be simplified without compromising the overall quality or the governance standard. So for each process, it was a iterative exercise. So every month, few things were automated, few things were made simpler, few things were done prior. So what we saw every month, we were able to cut down the time over 1 or 2 days. So what we saw over a period of 6 to 8 months, we actually cut down the time by 10 to 12 days. So that's how it was done. Now the same team is feeling really motivated because they now do very good business partnership. They share the insights and they feel really valued in the firm. So that's my take on this your question. I hope I'm able to answer it.
Yeah, yeah. So just, I mean, it's amazing to hear. So just to recap, you really feel that by freeing up that time, the CFO can do more valuable work, get more data, do more insights. And by getting the team involved, not only do they feel part of the process, but they can then report to you what needs to be sped up and what can be a bit more efficient. So not only does it help the employees, but you have more free time to do more effective work, basically, in that sense.
Absolutely, absolutely. So leaders are as good as the team is, right? More efficient team, the better leaders will be, right? So, I'm a firm believer of that.
Yeah, and just to add on to that, was there like a few bottlenecks that you found in that process? And what do you think had the highest impact of things that needed speeding up? If you can, possibly give one example of one thing that
Yeah,
really.
absolutely. So absolutely. So it boils down to building a granular data, granular analysis. So many times, certain data either not there in the system, so the team will source it from somewhere, then they try to reconcile it, and then it takes a lot of time. So what we did, we kind of try to make sure the base data itself is there in the system, so that you pull the data through system itself, so the process become automatic. That was one big bottleneck which was removed. Secondly, I think planning plays a really important role. See, I can, take approach where actually I start preparing the report after the month end is over, then I will do the rollover, then I will wait for the data. Other approach could be I do everything else, just wait for the numbers to come, right? So these are two main things. It's a change of mindset that I will think, keep everything ready. Moment number comes, I just plug in and it's done.
Right, I see. And obviously, by doing that, you're then going to be a lot more efficient anyway, and you can just speed up the processes that actually
Yes,
need to be worked on. That's
absolutely.
perfect. Thank you for your analysis there. That's very, very helpful. I want to actually move on to a different point, Darren, if you wouldn't mind. When working at banks, it's a little bit different when you're working for, say, a standard limited company. Say you've got stock to move. Banks are very different in the fact that where you're such a high-end financial institution, your credit rating becomes very, very important for a number of different reasons. Now, correct me if I'm wrong, but you managed to secure an A3 credit rating with Moody's, if that's correct to say.
Yeah.
So I wanted to ask, what tips would you have to other CFOs from your experience in that process, if anyone else is about to go through that?
No, no, absolutely, Jack. So, bit of disclaimer I want to give here. So, all views are my personal views. They don't represent view of my organization. And also, you would find some of my answers at bit higher level. Reason being, I just want to make sure no sharing of proprietary information over this
Of
call.
course.
So the whole purpose is to, share my insights or learning with my fellow finance colleagues, if they can benefit out of it. So keeping that in mind, one thing we have to recognize. So rating agencies have a very comprehensive model to analyze any bank. They do a deep analysis of any bank. So it's very difficult to get something which you actually are not. In the sense, what I'm trying to say, there's no option of any window dressing, right? So you will get what you really are. Now the point is, if you want to improve your ratings, so what steps you can do, right? And first of all, before going there, I would also like to point out why rating is important in a banking context. It's important because your cost of funding is also linked to the kind of credit rating you carry.
Mm.
So the people perceive your risk as per your credit rating. So your cost of funding, which is a raw material for your banking institution, is practically depend upon the rating to some extent, and that basically enable you to do a different set of business depending on what type of liability you get, right? So that's why it's really critical. And also sometimes your clients would deal with you more if you have a better rating, right? So it's all about risk management.
Mm.
Now how it can be done is that I think it's really important to understand what the model rating agencies are actually using. One has to understand the model, and with my experience they are pretty open in terms of explaining the methodology which they use to rate you. So you can have a chat with them, you can understand the model. Based on your understanding, you can also build up some sort of back of the envelope model which will kind of point out what are the drivers behind the rating what you are getting, right? There's always certain set of drivers and the balance sheet matrices which gives you a particular rating. Now let's say if you are at some place and you want to move up, or you want to need a uplift in your rating, you can also find out what is the transformation in my balance sheet matrices I need, right?
Right.
And you can also cross validate with the rating agency. They are happy to discuss that as well. So then you really know where you are. If you have to reach there, what do you need to do?
Mhm.
Now let me again tell you, balance sheet matrices are an output of your business strategy and model, right? It's an end result, it's not the start. So if you need to influence your balance sheet matrices, you actually have to influence your business strategy or might need to tweak your business model to achieve those set of matrices. For that, I think it's really important first to take buy-in from the board of directors, where you present in terms of why it is important, why the bank will still be sustainable after amending the business model or strategy. After the board approval, you need to actually engage with the senior stakeholders in terms of ensuring they also understand why it's required and what impact it will have on the organization. So after doing all those steps, once the transformation actually starts happening, it's also important to have a continuous dialogue with the rating agency, right? You
Right.
have to keep them briefed and informed what's happening, and you also have to explain to them, how my balance sheet matrices are changing, why they are changing. So it's a change in the business model which has taken place, because they also want to get a comfort that whatever you're doing is sustainable over a
Mhm.
period of time. It's not that some shortcut you have taken and suddenly it will change over a period of time.
Right.
So continuous dialogue with them, and actually it's a process of 2-3 years. They will not give you benefit in 1 year. If they see a trend over a couple of years, you explain to them very clearly the rationale of change in the business model and how it's helping the balance sheet matrices. That's where only they will give you the actual benefit of credit uplift. So it's a hard job, but it can be done provided the organization is aligned with it.
I see. And also, I guess that links back to what you said earlier about freeing up your time, with your staff members, your colleagues, your month-end closes, where if you're in this process, you're going to really need that crucial time to spend
Yeah,
on this because, like you said, I think a lot
absolutely.
of it isn't a very quick thing. It's constant communication with the credit rating agencies, with
Yes,
the board. So you need to make
yes,
sure that you have that time available to be
yes,
effective in
yes.
that communication.
Yeah, and it has to be it has to make sense. So whatever you're saying, it has to make sense. It means there has to be proper analysis behind it. For that, obviously, you need time, and where you find the time by cutting down the normal process, automating the activity.
I see. And also just if you wouldn't mind sharing, I mean, like you said, this is kind of not directly based to your company, but just in general.
Yeah,
Looking back, what do you think that most CFOs underestimate in this process? Something maybe they think is going to be the easiest part, and it turns out it's the part that you need to pay most attention to in your experience.
yeah. So I think it's the internal stakeholder buy-in. What we are doing, why we are doing. Are they aligned?
Mhm.
Do they see value in this? See, otherwise, one can make beautiful plans, excellent strategy, but execution, if it is not there, it is of no use, frankly. So I think it's good to have a workable plan, workable strategy, but alignment of stakeholders, which ensure each actually get delivered.
Right, I see. And also that means then you're not, as a CFO, left on your own. You've got the buy-in from the whole C-suite that can
Absolutely,
then back you,
absolutely,
and you're all working together in one
absolutely.
play, effectively.
Because
Yeah.
CFO is representing what the organization picture is, the balance sheet matrices is, but those are driven by the actual business the business teams are doing, right?
Yes,
It's the
exactly.
business model, what bank is doing, what type of customer the bank is onboarding, that what kind of risk bank is taking. That will all
Exactly.
reflect in the balance sheet matrices.
I see. And just to move things on as well, Darren, I think again it's a great opportunity to have you on this podcast, because when we're talking about banks, again, it's very different to say your normal standard LLCs and your limited companies, but people don't realize that banks have very, very fierce competition, and you need to stay on top of that data. So I wanted to ask, since we've been talking about data, what kind of competitor analysis are you doing at the moment? And what can you do with that data to then improve your own service as a bank? And I suppose this can also be effective with other types of businesses, not just banks. But what is it that you can look for in that data to improve your service?
No, absolutely. So rightly said, banking is a fierce competition. Practically all the products, most of the products are standardized. Where
Mm,
you differentiate is how you deliver the product. What is your service quality vis-a-vis other player, right? That's the main differentiation you will have in terms of products, etc. So, we'll have to understand that we are in a competitive market space. We are commercial organizations. So there is always a market context to whatever one does. And doing this competition analysis, to my mind, is not a option, it's a necessity, right?
mm,
If you have to stay relevant in a market context, you have to first understand what the market context is. So that's why it's really important. Now, from a banking perspective, there are a couple of things. One is understanding the macro picture. That's really important. Secondly, understanding really who are the your competitors and what they're doing, etc. So
mm,
coming to the macro picture, any movements in currencies, interest rates impacts the profitability of banks in a significant way.
mm,
So it's really important for CFO to understand, what's happening in the macro environment, why it's happening, what are the likely trends, and what are the risk mitigation strategies bank can use to, effectively reduce the impact. Or sometime it also present a opportunity. You can use it as an opportunity to enhance your profitability, right?
mm.
So it's really important to do that. And once you do that, it's quite visible in your board presentations, etc. It really builds trust of stakeholders on you as a CFO, because they will understand this guy, understand the market, build appropriate strategies which make sure the bank is protected. So that build trust with the internal stakeholders. Now, what sort of data analysis or what sort of analysis? I would say two prong. One is macro.
Mhm.
You build macro analysis, what's happening. A lot of stress testing banks does. Banks are required to maintain certain capital, liquidity. They do a lot of scenario building. They do a lot of stress testing to make sure they always are liquid and they always have a capital to take
Mm.
care of any market stress event or even the idiocentric stress impact. That's one. Secondly, it's also important to understand who are the competitors for you. So normally banks does multiple products. So you also have to understand for each product who is that my competition, what they are doing, what is their strategy, what's their profitability, how they are delivering their product. So there are a lot of disclosures available under annual report, Basel disclosures, their websites. Sometimes my team members also explore product and services of other banks to understand how they're delivering, how is different from our product and services. So it also gives a clear, meaningful picture of what players are doing. Because eventually, when you are sitting on a strategy day, or when you are having discussion with the business teams, you also have to provide a challenge to them, right? This is what you want to do. Oh no, this bank is doing this way, other guy is doing this way, this is
Mm.
happening in the macro environment. So the conversation actually become really meaningful.
Yeah, exactly. And I think it can also be different, probably maybe 10 years ago to now, where you have your kind of high street banks. And now you've
Yeah,
got a lot of these neo banks, more of the
yeah,
nimble players. So
absolutely,
I guess you
absolutely.
have to make sure that you've got all of the macro data, all of the data to make sure you're staying on top. But I guess this goes to, standard businesses as well, where a new bank may come out with a new feature. It's going to
Yes,
take all the other banks maybe a few years to
yep,
catch up. But you don't just want to jump on the bandwagon for the sake of it. You need to make
yes,
sure that, all of your back office finances aligned for that play to happen for the next 5 years. So is there any way that you decide what to jump into and what not to in more of a
Yeah,
long term play?
yeah. So again, I would always give caution to the teams. If you have to travel from, I'm just taking an analogy. So if you have to travel from place A to place B, you can use Ferrari, or you can also use Toyota, right? So what's important is travel from A to B, not what car you're traveling in. In that sense, you build a model or a feature which provide the value to the customer. It may not be best in the market. It may not present the best UI UX experience. What customer want? Banking is just a side activity for them, right? They want their transaction to be done,
Yeah.
right? It's not that they are buying banking, they are buying the product, right? For that product, they need to make the payment. As long as your product is simple, easy to explain, customer journey is smooth, they don't experience hiccups, I think it's fine. But sometimes, people get shifted towards, no, I want to build best UI UX experience, which is very expensive. I want to be best in the market. That's why, sometimes I have to stop them. No, is it really required? Is it really worth? Is it really making sense? Is it really adding value?
Yeah, exactly. Especially when you get not just banks, but you have a company that has the best and brightest new UI. It looks very fancy, but then in the back end, the payments may not go out on time. It's difficult to add
Yes,
a new beneficiary from the customer side.
absolutely.
But from the real crux of it is all of that really is a little bit of noise unless you have your
Yes,
foundations correct, that the
yes,
customer is getting
absolutely.
exactly what they
Absolutely.
need.
So
Um,
your model should work, customer journey should be smooth, customer should not be annoyed. I think that's the basic principle one has to work with.
And anything else is then just a bonus once that's
Yeah,
figured out. Yeah.
absolutely. Absolutely.
I think there's a few people that can definitely learn from that message. Lots of different companies and different banks, especially being in the market for the past few years. Um, Darren, is there any way that you stay up to date with regulations and market trends? So obviously this is going to be a very, very important one as a CFO. But is this where automation and your team then can come in to help to share workloads? How do you remain effective in that aspect? Because obviously the CFO role, you've got lots of different plates, liaising with shareholders, board meetings, keeping up to date with the data. But then you've got this other part, especially with banking, where you have to stay up to date with regulations and market trends. So do you put some time out of your schedule to look at these things, or how does it work with you at the moment?
Yeah, so see, we have to understand banking is a highly regulated environment. It's as an industry, it's highly regulated. Why it's regulated? Because it accepts public money,
Mm,
right? Banks take deposit from public. Now the regulator just want to make sure the public money is safe. That's why the regulations are there. Now the market context keep on changing all the time. The way the business is done keeps on changing all the time. That's why the regulators will also keep on changing the regulation to keep abreast with the market changes, because otherwise it will be outdated framework.
mm,
Now, now it's really important for CFO to understand what are the regulatory priorities, what regulator is thinking of, what are the regulatory themes, what are the major areas where regulator want change to be implemented, or certain new features or infrastructure needs to be built. And let me tell you, implementation of regulation is not an option, it's a must, right? So you don't have a choice not to implement, but you can also have a competitive advantage how you implement the regulation by keeping customer journey at the heart of it, in the
right.
center of it, right? So sometimes same control can be exercised by really annoying the customer. Sometimes the same control can be exercised in a smart way without making the customer journey painful, but achieving the same result,
Mm,
right? So it's really important to implement the regulation in a way which don't give you competitive disadvantage as compared to other market players. Now, see, normally in any banking environment, the organization would have a regulatory change forums, which is a cross-functional team which tracks it, both the incoming regulation as well as implementation of it. What I do, I actually attend a lot of industry events to make sure I'm updated in terms of what's happening in the industry, what is the market approach to the incoming regulations. I also maintain active dialogue with the subject matter experts and other industry participants to make sure what we are thinking is at least is aligned with the industry, because there are so many other people who are thinking about the same thing. Sometimes you get ideas which are quite unique as compared to what you are thinking. I think it's important to maintain a dialogue with market participant on a continuous basis to make sure you are totally up to date in terms of market change in the regulation and how it's getting implemented.
Right, I see. I think that's quite a crucial one, especially when it comes to the networking and events, because then you're hearing directly from the source the up-to-date
Yes,
challenges, the regulations.
yes,
Maybe you can
yes.
hear, what new products that you can bring in to help that as well. I don't know what it's like in the banking sector at the moment, but especially for what we do in terms of currency transfers, the onboarding is getting a lot more stricter over the years, and obviously that's probably the same with the banks at the
Yeah, yeah,
moment. So,
absolutely, absolutely. So
you know.
regulator always want to make sure the system is protected. Not the fraudsters are not getting into the system, etc., etc. That's always the priority of the regulator. So hence, it's very important to keep abreast of what's happening in the market.
Exactly. And that way, I suppose you can then implement something quickly. For example, if onboarding 20 years ago was very different, now all of a sudden you need make sure to have ID, face verification. You can implement these into the onboarding process ahead of time. So you're staying up to date with those
Yeah,
regulations.
yeah. So it has to be done, but one also has to be slightly careful in terms of, with the advent of AI, a lot of deep fakes are happening, right? So how do you kind of take care of that while doing that journey? So sometime, a friction in journey might be required to make sure the customer is genuine. Again, it's a balance one has to take, right? So that's just a question I wanted to kind of bring in here.
Yeah, no, this is a very important one now, isn't it? Because I think this has come out in the last couple of years. So I think banks are probably going to have to keep on reviewing this very closely
Yeah, yeah,
over the next couple of years, because obviously as AI gets more and more advanced, it's going to be a
yeah,
lot more difficult to
yeah.
identify if those IDs are correct or not. And that's just a
Absolutely.
perfect example of staying up to date with those trends and
Yeah,
regulations. You have to make sure that you're on top of that.
absolutely, absolutely.
Yeah. I'd actually just wanted to ask, Darren, and I do ask this to a lot of CFOs, but I'd love to hear from you, from your perspective. What does the CFO role mean to you, and where does the value really come from in terms of what you should be doing?
Yeah, so see, frankly, if you ask from my perspective, so it's very simple. So CFO role is to assist the CEO and the board in terms of realizing the organization objective and vision.
Mhm.
That's the role of CFO. Now, where the value does come from? The value does come from deep analysis of the competition, market environment, understanding of the balance sheet matrices of the company where you are working at, understanding the business model, strategy, what is the impact, what market is doing, right? So all that helps in effective decision making. CFO actually plays a crucial role in terms of important decisions in an organization. So if CFO is updated about all those things, it can really add value to the
Mm.
organization in the actual decision making. And eventually, I think from my point of view, CFO's job is to ensure the business is sustainable, profitable, and it provide adequate returns to all the stakeholders. When
Mm.
I say all the stakeholders, it involves employees, shareholders, vendors, partners, consultants, and everybody, right? So it's an ecosystem. A bank can't work without the ecosystem. So you have to create adequate returns for all the stakeholders. So that's where, to my view, CFO role is. So if one looks at bigger picture, yeah, this is my role, then you would not shy away from any project or any organization transformation or any balance sheet transformation or whatever is required to achieve that, right? So at
Yeah.
the end of the
Mm.
day, CFO has to be motivated, right? So what keeps CFO motivated? So if you aim the bigger picture and you see, oh, if I do this, this is the impact on my organization. If you keep that bigger picture in mind, I think then everything gives you joy in terms of whatever activity you do. That's a nutshell, I would say, the CFO role in my mind.
Yeah, I think you hit pretty much the nail on the head. It's, making sure you enjoy it, doing the right work, and also that you make sure that you share that financial story with the whole organization, not just C-suite employees, and being that glue for everyone there. I wanted to quickly finish up on a bit of a quick fire round, Darren. The first one being, what is the one risk that banks underestimate at the moment in 2026?
Uh, I would say operational risk.
Mhm.
Yeah.
Operational risk. Just a very slight example, just in terms
Yeah.
of the
So,
operational risk.
after the global financial crisis of 2008, I think banks are very solid in terms of capital, liquidity, and everything, right? Where the next risk is coming from? The next risk is coming from, what happens if your IT systems are not available because of cyber attack. What happens? Some employee makes some mistake, the phishing happens, the malware gets into the organization, and everything get blocked, right? And we are seeing so many instances of it happening in the UK market as well, not in the banking context, but in the industry context. So I think to my mind, whatever you do is not enough in the operation risk. So you should always have a proper, eye on operation risk. What's happening? Can I mitigate it? How I can mitigate it? So that's why I say, in my mind, people are still not spending that much time, which is really required in operation risk.
This is true. Very, very well said. We won't say any names, but you're right. We've seen it in the UK happen to very, very large companies with
Yes.
these cyber attacks, phishing, and
Yes.
the whole, not just from a C-suite level, but more so for the employees and staff to make sure that
Yes.
they're on top of the updates and making sure that they can
Yes.
do everything to prevent that.
Yeah. So you can
What's
have a beautiful system, Jack, but your employees are not trained. Something will get into the organization.
Exactly that. Yeah, and this is the important. I think, like even things like happens in our industry a lot, but every 6 month new training sessions, just to make
Yes.
sure, as we said,
Yes.
CFO has to stay up to date with
Yes.
regulations, but so do
Yes.
the employees as well. Very, very
Yeah.
important.
Absolutely. Absolutely.
What's one skill that every future CFO should master first?
As told in my previous conversation, so it's about focus on the organization goals. So if you focus on what organization is here for, and my job is to make sure the organization is sustainable, I think one would do wonders in terms of role, and one would stay motivated to do that role because you have to really enjoy your work. You have to be motivated to enjoy your work. I think that's to my mind is the most important aspect.
Very, very well said. And lastly, what's one metric that you check personally every morning?
So it's my liquidity buffers.
Right.
So how much liquidity buffer I had previous day? What is the projection of it over next 7 days, every day end? See, banks can sustain any other crisis. Liquidity crisis can bring down the banks. And we have seen in the past, it's a liquidity risk which has brought down the banks, be it Silicon Valley Bank, be it Lehman Brothers, or whatever example we have seen.
Yeah.
So it's really important. One has to be on top of liquidity buffers.
Perfect. Well, yeah, especially in a bank, that's probably the most important thing. So thank
Yes.
you for the reminder for that. Darren, you've been an absolute pleasure. Thank you so much for your time today. I think it's great to have someone from a bank on actually because there's so much that's in common between banks and also very large companies that share a lot of similarities. So thank you for touching on those points there. If anybody wants to reach out to you, maybe learn a little bit more about what you do at the bank or ask some advice from you, is there any way that they can reach out to you, whether that
Yeah,
be email or
absolutely. I'm
LinkedIn?
available over LinkedIn, so they can reach out to me over LinkedIn, so we can take it from there. Absolutely no problem. And I'm always willing to connect with the like-minded people. So it gives me more information, knowledge. That's the way I look at. That gives me confidence and encouragement to engage with other people.
Exactly. That was all about building the network and passing
Absolutely.
passing on and sharing that knowledge. So,
Yes. Yes.
Darren, thank you again so much for taking the time out of your busy schedule. Make sure you have a lovely weekend, and I'm sure we'll catch up again soon. Thank you again so much.
Thanks, Jack. Thanks for your time. Really enjoyed the conversation. Thank you so much. Bye bye.